friends, today I want to really focus on the exit from your trades. Many people see stock going up and what they do impulsively, just click the button buy. Just whatever number of shares, oftentimes people just do 100 or 500 or 10, some nice round number, and they are there for the ride without having absolutely no plan when to get out. Never get into a trade without knowing when to get out, with profit and with loss. Both of those are very important. So how do I do it? Before I look at the chart, before I get into a trade, I look at the chart and I draw the trend lines, I have my support and resistance levels, and I look at the trend and say, okay, also I can look at some moving averages for the planning, say, all right, if this stock gets below this price, I know that the trend is broken, my thesis is not going to work out, I'm wrong, I want to get out. The same thing I do with a profit target. You have to have some sort of a profit target. Why? Because otherwise you're just staring at the P&L as a deer in a headlight and you don't know when to get out. So you look at the chart and see where are the next resistances. If you don't take everything off by the resistance, you take a little partial off, maybe 50%, 25%, and trailer stop loss to the next pivot, right? When the market is moving, not in a straight line, so you can always play around with the price and with the stop loss. But you have to have this because oftentimes people say, oh wow, this is a great trade, here is my stop loss, but they don't realize that $2-3 later, there is a massive resistance that's going to be a problem. So you want to make sure that the profit target is much bigger than the stop loss, right? It has to make sense on the chart. You don't want to get into a trade where you're risking $10 and your chances to the next resistance are $3. That would be an awful trade. You want to make sure that you risk $3 and your chance of success is $10 because there is nothing standing in the way of the stock. You don't want to have ton of supply and ton of resistance is standing in your way. Resistances are very psychological. Support and resistance happens because of human behavior repetitions. People keep buying stocks when they are high and then they get trapped, the stock falls, people are trapped, and when the stock gets back to the same price, people are happy to have their money back and they sell. And that's why we see these support and resistance lines. Same thing, people sell too early. And then they're like, oh shoot, I sold too early. The moment the stock gets back to the price where I sold, I will buy it back. So that's why you have the support line, right? So in any case, you have to have all this ready before you get into a trade. You want to make sure that you're in a nice risk to reward trade. There's not too much standing in your way. If you would want to achieve anything in life, and you have so many things to do in order to get to your goal that's almost impossible or difficult, would you want to go that path? No. The same in the forest. Imagine you're taking a hike and one hike is very dangerous. You have rocks on the ground, there are trees fallen, and it's going to take you 5 times longer with a lot of hurdles to get to the top of the mountain, or you can take this beautiful easy path. Which one would you choose? Unless you're completely crazy, you will probably choose the beautiful easier path, right? Did you have more probabilities to get up without so many difficulties? So think about it this way when you're trading. It really works. And protect your capital with stop losses.